Anas Al-Haji, welcome back to Face, my friend.
Good morning.
Good morning, buddy. So you're the guy I want to talk to. I'm not sure what the reaction in crude I would expect is probably popping with risk a little bit today. You have a presentation, so I'm not going to interrupt you a lot today, Anas. Just quickly before you get started, what do you think of the $70 level in WTI?
Well, in a sense, that was expected. As you know, that we launched this new Substack newsletter
Right.
about 9 days ago before OPEC meeting, and we warned in that letter. In fact, we made several predictions where we're really happy to see each one of them was spot on. And one of them was, look, if OPEC does not do anything, oil prices will decline by about $10. And that's what we saw, exactly about $10 decline in prices. So that was not a surprise at all by any mean. They might go even lower despite the opening in China. And I will discuss this today too. If you don't mind, I would like to share some slides.
Sure. Go ahead, and it's at the bottom, the green screen share button.
Yeah, for some reason the screen just disappeared on me for some reason. Okay.
How about now? See it?
The big screen where I do the share is not there anymore. So let me see what I can do here. Share screen. Okay. And
yeah, there you
let's go here. Okay.
Okay, it's coming up.
And yes, so I don't want to make it that formal, but at least I would like people to be familiar with some of the charts. This is the address for the Substack, and how can people reach me if they have any questions about what I'm saying today, especially the Twitter account. When we talk about OPEC, I think seriously OPEC should have done something in their meeting on Sunday. Everyone was looking for them to do something. And a lot of people were talking about they should have cut production. Now, I said this earlier, over a month ago, that they should cut production. But as I studied this, I found out that the cut is a bad idea, especially for political reasons, not only because of the Biden administration, but also because of members within the organization who are not going to cut anyway. But if we look at the objectives of OPEC Plus, the objectives of OPEC Plus is to manage and balance the oil market. And within that, they want to reduce volatility. At the same time, they have another objective that prices must be high enough to stimulate investment. And investment not only within OPEC Plus, investment worldwide in upstream oil and gas, because they realize that the demand is way higher than what's going to be available. So these are the main objectives. The hidden objectives, of course, are revenues and high prices. They need the money.
Yeah.
And the idea here is, how can they do all of that? Manage and balance the market, reduce volatility. Prices must be high enough for investment and high enough for their spending too, and for their social programs and other things, and development and all these things. And the cut is not going to do it again because some members are not going to cut. At the same time, there will be we already have seen the backlash from the Biden administration in October. It was a big, massive backlash, and the media just was crazy about the cut, although the impact of the cut basically was nothing. We already seen prices decline after that, which means that OPEC has better information than the Biden administration. So let's look at what OPEC should have done, or OPEC Plus. I'm not inserting my numbers here. This slide basically on the left side shows OPEC estimates of global oil demand in 2022 versus 2023. And looking at 2023, they see first quarter oil demand the same as the fourth quarter of 2022. Then we have a decline in demand in the second quarter. Then demand starts picking up, and then a massive growth in Q4 2023. a massive growth, where they expect oil demand to reach 103.4 million barrels a day.
Okay.
Which it's unprecedented.
Okay, that's with everyone in the world. Probably China is in gear by then. Is
correct.
That part of it.
Okay. Everyone, almost everyone by then. But the idea here is to look at their fourth quarter 2022 versus fourth quarter 2023. They need, or we need, more than 2 million barrels a day, 2.1 million barrels a day extra above what they produce in the fourth quarter. Okay. Yes. Where that oil is going to come from, based on their estimates, and that's on the right side, we see that half of it will come from non-OPEC. A lot of people question that, whether we are going to have that growth in non-OPEC or not. The other half will come from OPEC. And the question is, okay, if OPEC use another 1 million, what's going to happen to their spare capacity? So that's why I'm bullish. This is one of the reasons why I'm bullish on Q4 2023 if we don't have a recession in 2023. Here is the problem. We have something called the call on OPEC. The call on OPEC is the difference between those two charts. So we have the demand on one side, we have non-OPEC on the other. You subtract them from each other, you get the call on OPEC, and that's the next slide. The next slide has two important things. People, when they talk about decline in oil prices in the fourth quarter, they talk about various reasons. They talk about fear of recession. They talk about the lockdowns in China, problems in Europe, etc., etc. But what people do not know is the following. You look at that chart, you see a solid green line. That's the 2022 estimates of the call on OPEC by OPEC itself. And then you look at what they actually produced, and that's the dotted line, and you can see that they actually produced 1 million barrels above that. 1 million barrels a day being dumped on the market above their estimates. Here is the problem with that. The problem is people who are bullish or who were bullish and ultra bullish on oil, they kept arguing. Some OPEC members are not meeting their quota, and therefore we are bullish. Prices should go up. And we've been trying to explain to them, you are looking at the wrong way. And this is the proof right there in front of them that this is the right way of looking at it, and it was bearish. And looking at the inability of OPEC members to increase the quota, just like someone saying, you know what, I want to live to be 100, but that person dies at 80. So what? I mean, his wish to live to 100 has no meaning, has no impact. And those bullish guys, basically, who are bullish on oil, basically been using that argument. Oh, he said 100. Okay, so that's where the problem is.
What about, they've been wrong for a long time. I mean, since the invasion.
So here is the other point about this chart, which is very important. That's the million barrel. You can see the million barrel that OPEC has to add based on their estimates on the right side, which means that either their forecast is wrong, or they have to increase production by 1 million barrels a day. Again, I'm going to repeat that because this is very important. Either their forecasts are wrong, or they have to increase production by 1 million barrels a day. What is the problem? The problem is OPEC decided to cut instead of increasing. OPEC agreement to cut production is to the end of 2023, which means that fourth quarter where they need to add 1 million, they need, based on their agreement, they have to cut, which means that they are going to renege on the agreement. They are going to change it to meet the global oil demand. But at the same time, we have problems in December. We've seen prices declining. Their revenues are declining. Volatility is increasing. Their main objectives that I mentioned earlier to manage the market and bring stability to the market did not happen. How can they do that? Well, the solution is not to cut production. The solution is literally to change, to change the contango in the Brent to backwardation. And it has to be a steep backwardation. And how can they do that? all they get to do is move the cut from the fourth quarter to the first quarter. Or if that's a problem because the cut is going to multiply in the first quarter and some members may not like it, well, make it distributed over the first half of the year. Since the demand is going to be weak relative to the second half, take that, because you are not going to cut anyway in fourth quarter based on the data that I just showed. So all they get to do, just move that cut to the first half or to the first quarter, and thus flip the curve to a steep backwardation, and they achieve all their objectives. Traders are happy. We have liquidity in the market, and everything is fine. We discussed this in details in the newsletter that we have on Substack.
Okay.
The other issue is the EU sanctions on Russia. This is one issue that people should realize, that the expected major decline in Russian oil exports is not going to happen. People who did not study sanctions, people who are not familiar with the history of the oil market, they really need to stop making statements like this without any evidence. We have enough evidence from the ground and from history to show that Russian oil will continue to flow to the market. This is just one chart showing Russian crude exports via tankers this year, and you can see the increase in recent quarter. You can see that, and they are back to almost 5 million barrels a day, despite the sanctions and despite everything. And this chart, I think, is the most important chart I'm showing today. This is Russia's crude exports by destination, and I'm comparing November 2021 to November 2022. And what we have here is, if you look at the European share, 58% of Russian exports, 58%, that's 2.66 million barrels a day, used to go to Europe before the Ukraine crisis.
Right.
Now with the sanctions, people say, well, the sanctions are successful. Well, look at what the Russians are saying. The Russians are saying, we shifted our crude to Asia. So the narrative is completely different. The West is saying, we reduce dependence on Russia, and Russia is saying, no, I reduce dependence on you.
Okay.
So they are shifting production, shifting exports. They shifted the percentage of exports to Europe in November was only, excuse me, I have this kind of dry cough for a while, and it's bothering me.
I'm sick as a dog, so I understand.
So the exports to Europe, November to November, declined by 1 million barrels a day, from 2.66 to 1.6. And you can see that in Asia, for example, the portion went from 28% to 48%. So that million literally shifted from 1.3 to 2.3, China, India, and others. But what the point here, the main point is, in November, Russia exported 1.6 million to Europe, and then the sanctions were imposed on December 5th. So what would Russia do with the 1.6 million? Where that's going to go? That's why some people were saying, oh, Russian exports are going to decline by 1.6 million. That's a very static view. The fact is, and based on our research, that 1.6, it's a little bit exaggerated because some companies decided to take more to Europe before the sanctions hit. So the actual number is really about 1.4. From within that 1.4, about 1 million or 1.1, half of it will go to Asia and other OPEC Plus members. The other half basically will reach Europe under different names and different ways. Based on our estimate, the Russian exports probably would decline by about 300 to 400,000 barrels a day, and that's it, which is a non-event, especially with the OPEC Plus cut.
Okay, are they discounting the oil they're selling to Asia dramatically?
Sorry, will you repeat that question again?
Are they discounting the price?
Big time. In fact, it's being sold in the 40s now.
Okay, and,
so we are talking about $46, $47.
And that's okay for Russia to be having a fire sale, even though they're selling?
Okay, I will go back to that in just a minute. I just want to make a final comment on this chart, and then I'll answer that question. Okay. So the idea here is, The decline in the end decline because of sanctions about 300 to 400,000. They can put that under OPEC cut, or what we are going to see is we are going to see Russian companies going for maintenance and doing maintenance, and under maintenance they will say, oh well, our production declined by 300 to 400,000. Now to go back to your point, the Russians are making the following statement. They are saying that the average price for our oil in 2022 is similar to our average price in 2021, yet we ended up with a surplus in 2021 in the budget, and we're fine. So instead of looking at $100 prices in 90 and 80, they are saying, let's compare it to last year, and we are fine. So that's the Russian argument.
Okay.
Now, one other piece of news is Venezuela. As you know, the Biden administration gave a license extended the license to Chevron to help the PDVSA and its two joint ventures to bring up more production and more exports from Venezuela on, excuse me, on one condition, that the oil has to arrive in the United States. The oil has to go to the United States. This is very important for a different reason I will mention in a minute. But let's look at this chart here. This is Venezuelan exports and production. That green area is not only consumption, because when they were not able to export, their storage goes up. So that's why you see this kind of pyramid looking, or the triangle. That's really storage. But you can see production is about 670,000 barrels a day. There are two issues here. The Chevron story is not a big story because the two joint ventures can add only 200,000 barrels a day, and that will take time. But they are able to ship some in the next 2 weeks. And as you know, it's heavy crude, heavy sour, which US refiners want. And the reason why the Biden administration is interested in Venezuela now, a few months ago, they allowed the Italian Eni and the Spanish Repsol, give them exemption to export Venezuelan oil to Europe. But now they are saying, no, you have to ship it to the United States. And the reason why, because if they want to use the SPR, most of the oil left in the SPR is light sweet, while refiners want the medium heavy, sour.
Okay.
So so the issue of Venezuela is not related to the quantity, is really related to the crude quality. However, if the Biden administration gives shale producers in the United States exemption to export natural gasoline, which we use, we donate to it by using C5, the letter C, and then number 5. This is a diluent. If they send about 125,000 to 150,000 a day, barrels a day to Venezuela to mix it with their oil so it can move in the pipelines, Venezuela can add about 300 to 400,000 barrels a day easily within a few weeks. So there could be something there if the exemptions extended to US shale producers. And of course, the Keystone Pipeline, we have a complete separate newsletter on this one. The expectations basically is that we are going to see a major decline in Cushing oil inventories. They are already low as shown in this chart here, and we might end up with 2014 levels, almost 20 million barrels a day, or we might go even lower to 2008 levels after the financial crisis. The Keystone issue, the main issue, is about crude quality again. So crude quality is appearing in the Venezuelan decision. Crude quality is appearing here in the Keystone issue. If this lasts for another 2 weeks or so, then there will be pressure to import more from Latin America. But the problem is we have already problems in Ecuador because of weather in the last few days. So this is going to increase the prices of some crudes. So the impact is going to be on the differentials more than on the price level. So again, it is about crude quality.
Okay.
On the inventories, I think we still have a few minutes.
Yes.
Okay. On the inventories, U.S. commercial oil inventories been declining, as you can see in this chart. They are not by any standard. They are lower than previous years, but not low by historic standards. And as you can see, they are going kind of mostly counter to the historic trends. We've seen something like this in 2017, but that happened after OPEC plus basically cut export to the United States significantly. If you look at it by historical standard, that's why the ultra bulls have no case here, simply because yes, we have this major decline, and you can see it on the chart on the right side, but you look at the history of it, and it's still way higher than the era before 2014. As you know, we have two major events, one in 2015 and one in 2020. 2015, we have the crash in the oil market, and 2020, we have the COVID. So you cannot put this as part of the 5-year average. So if you compare it to the era before 2014, the storage is still high. And if you look at gasoline, we have a serious problem. You can see the red line there, still really low. We need more, and we need U.S. refiners to do more. But the question is, can they do more? And I'll show you another chart to prove this point. Of course, distillate, especially when we talk about diesel, heating oil, we have a serious problem. You can see how low we are. We have an improvement in recent weeks, but it's not enough. And people say, well, you cannot use those charts because you are not counting for demand. And therefore, we need to adjust it for some anchor. So we adjust this for the what we call days of cover. And you can still see that by days of cover, looking at how the level of inventories relative to consumption, it is still higher than way higher than in the past, especially before 2014. And for the SPR, yes, for the SPR, still not a big deal. We still have about 380 million barrels of oil in it. It's just the problem of the SPR right now, again, is crude quality. And to give it a different meaning, to look at it, what the decline is, this chart shows that, yes, we have a major decline in SPR, but the Biden administration is not draining the SPR. We still have a lot of oil in the SPR. And this is the final slide. If you look at what I said earlier about gasoline and diesel, this is the inputs into refineries versus refining capacity. Notice that the first takeaway from this chart is that from 2020 until now, we lost 1 million barrels a day in refining capacity. That's lost forever. That's it. It's gone. And we cannot build more refineries simply because of all the environmental regulations that we have. And the expansion of refineries is in question because the regulations in California are really forcing refiners to shut down. So we might see some expansion in Texas, but we are going to see a decline in capacity in California. And then you can see that the utilization basically and the inputs where that red arrow is, it went up. That's why we ended up with that increase in gasoline inventories and distillate inventories in the last few weeks, simply because refiners were able to crank up more of that. But the problem is, if U.S. economy is really in full gear and we end up with like 3% economic growth, we have to import gasoline and diesel. Why? Because of refiners, not because of anything else. We don't have that much capacity left. And that's
not only the refiners, the pipelines. So you could have more refining capacity, but the difference in prices on things like natural gas in different parts of the U.S. is amazing.
Correct.
What people are paying, right?
But the only issue here is we can build pipelines even under the current environmental regulations. We can build more pipelines and solve this problem domestically. The problem is with the refiners, we cannot. That's really the big difference between the pipelines and the refining capacity. And all of a sudden, now the United States, despite all the talk about energy security, energy independence, etc., all of a sudden, all of that gets ruined when we start importing gasoline and diesel from China, India, and Saudi Arabia.
Yeah, that's a game changer. So best guess in us, range on oil, 70 a floor. A lot of people, do you think that Biden's going to get his price, his limit order is going to be filled at 65?
even if prices decline, and I think they might decline, he cannot. And the reason why he cannot, because he cannot sell and buy at the same time. He needs to sell everything he needs to sell. He's selling 15 million barrels today, and he already sold 4.5 last week. So we still have about 10 million. So he needs to sell them first. The other problem he has is we have the Congress mandated SPR sales, which he has not sold yet. So he cannot just sell on one side and buy on, just to be a joke. The other issue is, I don't think he is going to do that. And the reason why, think about it this way. If he wanted to fill the SPR at certain price and he end up with those idea that I'm going to go to the futures market, I'm going to sign those contracts, and I'm going to fill it at 65. What if Saudis crash the market and prices become 40? Democrats are going to go crazy because they all say, you know what? Democrats are subsidizing the fossil fuel industry by $25 a barrel.
Okay, interesting. All right. Well, Anas, enlightening presentation. And the best place for people to contact you and get your new newsletter and stay in touch. You have different contact information for these?
Sure. I have it here on the slides in the second page. I have the Twitter account, which is my first name, my last name.
Yes.
Here you go. They are right here, and the Substack is there. Now for the Substack, people can get 1 week free trial and read what's going on. Especially the one on the Keystone pipeline. I think the issue of crude quality and others, people will enjoy that.
Okay. Well, we always enjoy having you here. People appreciate you being here.
Thank you. Thank you very much.
You know, and much success with your new project. I'm sure.
Thank you very much. Appreciate it.
All right. Anas El-Haji, everyone, my trading warrior brother. You want to know about what's happening in energy? Go to Anas. Thank you. All right. Bye-bye. So that's a wrap, everyone. You can join the team in 14 minutes on the Morning Edge. And Anas and I will get over our upper respiratory viruses by the next time we talk. A lot sooner, maybe. So everyone, don't just count your pips, count your blessings, and hopefully I'll be back tomorrow in better throat. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.